Good morning, everyone, and welcome to the Axis Market Minute podcast. My name is Akshay Chinchalkar, and today is Tuesday, 4th February. US stocks dropped for a second day as Wall Street was spooked by President Trump's tariffs and concurrent negotiations with America's largest trade partners. The S&P 500 ended 0.8% lower after being down nearly 2% at one point. The recovery came as Mexican President Sheinbaum said that she had a good phone call with President Trump, where a verbal agreement was struck to delay tariffs on the nation by a month. Elsewhere, Canadian PM Trudeau also said that tariffs on Canada will be pushed out by a month, marking a dramatic shift from all that happened 48 hours ago. The Nasdaq 100 finished down by a similar amount, while the Dow Industrials outperformed with a more muted 0.3% drop. Meanwhile, equity strategists are calling for volatility to remain high for the rest of the year, with JP Morgan's former head of quantitative research, Kolanovich, expecting the S&P 500 to drop to the 5,000s before year-end, citing a fallout from the evolving political climate. In markets, the VIX briefly spiked to about 20 before settling under 19. The dollar index surged initially on tariff-led safe haven demand to around 110, but ended the day lower. The 10-year treasury yield sank to a 1.5-month low before recovering. Bitcoin erased a near 6% drop to finish 5% higher. Spot gold scaled another record as it hit $28.30, and oil's opening spurt faded as it ended the session 1.2% down. In summary, volatility was the name of the game, and there could be more as President Trump said that he will be speaking to the Chinese administration in about 24 hours. At home, the rupee finished at a record low of 87.19, slumping 0.7% on tariff-related news and suffering its biggest daily slump since Jan 13th. The currency has dropped 1.8% against the dollar so far this year, making it one of the world's worst performing currencies. The RBI is scheduled to meet on Friday, and expectations are for a 25 basis points rate cut to 6.25%. Should it pivot lower, it will be the first time that the RBI would do so since May 2020. In other news, PM Modi has been invited by the Trump administration for a meeting next week. Coming to stocks, the Nifty sank at the open, but for most of the session was in recovery mode. It still finished 0.5% down, with the India VIX advancing 0.25 points. The NSE 500 mid and small caps ended up underperforming the Nifty. 9 of the 12 NSE sectors finished lower, with energy slumping 3% and IT rising 0.7%. Breadth for the NSE 500 stocks was firmly negative, with nearly 3 stocks falling for every stock that rose. Bajaj Finance was the biggest gainer in the Nifty, rising 5.3%, while L&T was the biggest loser, slumping 4.6%. Technically speaking, the Nifty's spinning top candle from Saturday was followed by a candle with a long lower shadow yesterday that shows near-term bulls remain active on dips. Support lies in the 23,062 to 23,200 zone, with near-term resistance seen in the 23,386 to 23,574 area, with an extension near 23,670. The index is still inside the falling channel originating from the 20th December lows, but yesterday's drop held the 20-day moving average on a closing basis, so at least for now, bulls seem to have the edge. In foreign flows, provisional data showed that foreigners withdrew about 4,000 crores on Monday, with the outflow streak at a record of 23 straight days. On to derivatives now, and the Nifty's and Bank Nifty's put-call ratios remain steady at 0.89 and 0.79 respectively. Nifty calls added were slightly higher compared to the number of puts added, and implied volatility was flat, which meant that on a net basis at the end of yesterday's session, market participants ended up with expectations that the market is likely to hold a tight range as monetary policy nears. Looking at options concentration for the weekly contract that expires on the 6th of February, the trackable range shrank to 23,000 to 23,500, with significant additions seen at the 23,500 call strike and the 23,300 put strike. Meanwhile, volatility yet again slumped across the curve compared to Saturday, with demand for out-of-the-money calls dropping less than that for out-of-the-money puts. So the expectation for the day is that if a trending move were to occur, it is likely to be on the upside. Positioning via net activity in index options showed that foreigners and prop traders were bearish with light positioning, while retail investors were bullish. Looking forward, the GIFT Nifty was up 133 points. Asian markets jumped with Japan and Korea, Korea the big gainers. Aster Healthcare and Balrampur Chini were at horizontal support, while Brigade, BEML and LIC Housing Finance were at horizontal resistance. Elsewhere, Persistent Technologies and Sundaram Finance were at trendline support, while Century Ply, KPR Mills and Sumitomo Chemical were at trendline resistance. Talking key moving averages for the NSE 500, 17%, 16% and 26% of members were above their 50, 100 and 200 day averages. Durable goods and factory orders data are due from the US later today. That is all there is for the day's podcast, and we will see you tomorrow at the same time. Have a good day. Bye-bye.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.